Good morning, everyone. Darius Dale here to present our macro minute for Monday, January 24th, 2022. Starting with markets, we have stocks down with Europe significantly underperforming the US and Asia, commodities down, crypto down, dollar up, global bond yields down. Big movers this morning. We have Germany's DAX index and copper down 2%, Bitcoin off 5%, Ethereum down 8%, and the Bloomberg Galaxy Crypto Index, which is a broader measure of cryptocurrencies, crashing down 16% this morning. Bloomberg was out with an article this morning saying digital coins or cryptocurrencies have shed more than 1 trillion of value of market cap since their November highs. If you recall, our analysis suggests there's roughly about 2.6 trillion in excess savings on the consumer balance sheet, at least here in the U.S. And so to sucking $1 trillion out of that is not exactly part of the bull case. So moving on to the economic front, the preliminary January PMI data confirm Omicron did in fact depress output. That said, the impact doesn't appear to be as pervasive as what we observed last summer with Delta. That means global supply chain disruptions should continue to be unwound here in Q1 without much, if any, delay. So improving, we had Japan manufacturing, Germany manufacturing, Germany services, and Eurozone manufacturing. Declining, we had Australia manufacturing, Australia services, Japan services, France manufacturing, Eurozone services, the UK manufacturing, and UK services. US PMI, the market PMI data will be out later this morning. Busy week of macro and micro updates in general, with the FOMC meeting on Wednesday is probably the biggest event of the week. We're going to be watching for clues on the timing and pace of QT in terms of that program and whether a 50 basis point rate hike in March is a legitimate possibility. How assets trade into the close Wednesday and on Thursday will go a long way to determining how risk assets are likely to trade over the next couple of months. Q4 GDP data out Thursday, consumer income and spending data Friday. We'll get the core PCE data point. That's the Fed's preferred inflation metric. Again, that number's on Friday. And then lastly, we don't spend a ton of time talking about things that you can't model with numbers, but the situation in Ukraine bears watching. After DC, after the powers that be down in DC ordered family members of its embassy staff in Kiev to leave due to the threat of Russian military action. Our take on this and our take on every other international conflict is that it doesn't pay to guess when it comes to geopolitical risk. You're better off building and paying or paying for, if you can't build it yourself, for a set of repeatable and robust and reliable risk management tools that give you clean buy the dip or get the heck out signals. And so that's obviously what we sell here at 42 Macro. So come check us out if you don't have those already. With respect to today's probable range setups, overbought silver and silver, oversold signal in Germany's DAX, S&P 500, Bitcoin, Ethereum, that Bloomberg Galaxy crypto index, the British pound, and the US dollar relative to the Brazilian real. S&P 500 is neutral VAM still. It's at the lower boundary of its probable range with 9.1% upside. WTI bullish VAM still with 6% downside versus 5% of upside. Bloomberg Dollar Index neutral VAM still minus 1.1% of downside versus 0.7% of upside. 10-year Treasury yield bullish VAM still minus 4 basis points of downside versus 22 basis points of upside. Bitcoin, taking it to the chart here, is at the lower boundary of its probable range with 27% of upside. I mean, I do believe we sold our Bitcoin somewhere around there on the December 10th, and didn't want to sell it. I mentioned that. Our fundamental longer term view on Bitcoin and Ethereum and cryptocurrency in general has not changed. But what did change was our risk management signals told us to get the heck out, and so that's exactly what we did, and that was a good call. But right now it's at the lower boundary of its probable range. So if you're a longer term cryptocurrency investor or someone who hasn't participated in the asset class, this would be the spot to take a shot. Last time we saw the lower boundary of the probable range, we had a little bit of a lift. And then the previous time before that, we had a much bigger lift. So, this would be the time to take the shot. But again, if things continue to get hairy in this asset class, obviously it tends to have a life of its own when it's going through these bear markets. So that's it. That is what it is. Ethereum at the lower boundary of its probable range with 46% of upside. So probably a better buy if you're going to buy anything in that space. And then lastly, gold neutral VAMs with 2.9% downside versus 0.8% of upside. So with that, Darius Dale presenting our macro minute for Monday, January 24th, 2022. Best of luck out there this week.